dependent on what sort of industry you're in and your employment. So it's not a black and white answer. It will be more difficult, obviously, as time goes on and more people are being laid off for work, to seek mortgage financing. Lenders are scrutinizing everything, even down to the appraisals. So there's some lenders that only will lend in GTA. They will not lend outside of GTA. And I'm speaking specifically to maybe the B lenders. So yeah, it's a lot of changes, and changes are coming every day. So they're adapting new ways of doing business, but they're also scaling back on things that they used to do before that they're not doing right now. So.
We get this burning question. So one of them is obviously, and I still get this, when is the right time to buy? We know right now, kind of in lockdown, but we get that question, and we probably speak to anywhere between 5 to 7 new people a day, Mary Grace, but out of those, we might find 4 or 5 a week, they need to move. So for example, somebody that might have, they have to, so it's more of it's not just I'm thinking, no, I have to move. Mm-hmm. But when is the right time to buy?
I think any time could be the right time to buy. You need to have your finances in order, and you need to know what you actually qualify for. That's the number, the first thing that anybody should do is understand where your down payment is coming from, how much you qualify for, what your credit score looks like. So, contacting someone like myself and doing a pre-approval and a pre-qualification is very important. As long as you know how your finances are, then any time is the right time to buy. So right now, I think that, we're going to start seeing maybe some prices of homes coming down, and buyers right now the first thing buyers should be looking at right now is getting their finances in orders and having that opportunity to strike when the iron is hot, because there are going to be some opportunities that people can jump on, but you need to be ready. You have to be ready.
That's really good advice. I had a conversation earlier today with one of our agents, and she does investments, and she was speaking with another gentleman that she knows, and was basically the same kind of in play. The economy has to move at some point. We know that. And we know that, you adapt a bit of human behavior, and we're where we are, but getting qualified and having the opportunity to act, because that alone could take a little bit of time. And that's what they were saying, to do this now. Don't wait, get yourself qualified.
Mm-hmm. And I find sometimes what happens is, some people may uncover certain things on their credit bureau that they didn't know that was there. And if you're not ready to buy in the first, in the next 3 months, you'll have those 3 months to build that credit and increase that credit score. So, some come to me a year in advance before they want to buy, and that's totally okay. Just so that I can educate them and get them ready for when they are ready to buy, right? So it's important to get started earlier rather than later.
We had a number of questions come in. It was all the same, and that is, where do you get the best interest rates now? Because there's always the talk. We know that the Bank of Canada's dropped the rate. And it was literally like, what is the best mortgage rate available, under COVID-19? Well,
it really depends. Like right now, the last 3 weeks, the rates were increased dramatically. We're now just this week starting to see rates come down. But again, they're much higher than they were 3 weeks ago. The variable discounts are no longer available. So the fixed rates seem, the variable rate is at prime. Some lenders are doing prime plus 20. Prime right now is 2.45. So your rate would be 265. Now, 3 weeks ago, up to 3 weeks, 4 weeks ago, we were doing prime minus 75, prime minus 85. So, those people that purchased and closed are now paying, 1.85% on their mortgage. So they've scored. But I think rates are going to come down further over the next few weeks. I think the first 4 weeks that this all happened, the first 2 weeks was all lenders had to remobilize all their employees to their homes. So I think that part of that was the reason why the interest rates increased a little bit. Just they had to slow everything down because they didn't have capacity of processing loans, and plus they were getting over 500 calls a day, just 500,000 calls a day just on mortgage deferrals. So they have been absolutely over inundated of phone calls when the first 2 weeks happened, when the first announcement happened about the mortgage deferrals. So there was no employee working on applications. They were all hands on deck answering phone calls.
For that.
So now that everything is kind of cooled off and there's been some weeks that have passed, we're going to start seeing the interest rates coming down further.
Okay. So what I'm really kind of hearing is, the interest rates kind of coming down, but absolutely they're being very thorough on credits, making sure, and they're tighter on it, making sure that you've got a healthy credit.
Yeah, a lot of extra due diligence. Like, I've been in this business since 2008, and the amount of documents that I used to collect in 2008 compared to now is mind-boggling to me. So, we used to be able to approve with just a notice of an assessment. Now it's like, we need 3 years, 2 years of documentation. So, a lot more due diligence, a lot more disclosure. And as long as clients are aware up front that the disclosure, all lenders are asking for that information, right? It's across the board. Lending has changed, and I've already seen so many changes happen in the mortgage industry since 2008. So
yeah, I have and I think you kind of answered, but somebody did come forward with one of the questions, and they said, if I temporarily lost my position because of COVID, would I still qualify for a mortgage? So I'm going to let you answer that.
Yeah, so it really, I would say no, but it really depends on, has your employer said, we're laying you off for just these 3 months and then you're returning? The issue is if you're closing your mortgage before you're returning, a lender will always need a pay stub and an employment letter. They're going to have to call the employer and verify the employment. So I would say no, unless you have a firm return date and you can produce like a pay stub and an employment letter. So like I said, it's a case by case. If you had a mortgage already approved and you were employed and you have a closing and you've temporarily lost your job during this time, they are doing some workarounds that. But if it's something that, you're right now, you're on EI and you're not working and you go and buy a house, no, that's
a pretty clear. Yeah. That makes sense. But that's good to hear what you just shared. And that, if you are like, if you were working, they're basically taking it case by case scenario, but confirming if you've got confirmation, you're going back. So it's just like a temporary, if you will.
Yeah, but even that still, like, you have to understand, like, we don't ever use EI as form of income. No lender will use EI as a form of income. So I would not recommend anyone buying a home right now that's temporary, lost their job, and is collecting EI at this point. Yeah.
But if they had purchased it prior and they had a temporary, then in that,
Yeah.
okay, that makes sense. That makes sense. Um, one other that I have here, they said, if I defer my mortgage payment, how will this affect me in the
So
future?
they're not reporting the deferral mortgage payments to the bureau, so it's not going to affect your credit bureau, which is a great thing. The mortgage deferral, you're just deferring the payments to either the end of the term or at the end of the amortization. It really depends on the lender and their lender's policy. So that's a conversation that you need to have with the lender. But that basically is the accrued interest is just going to be deferred till the end of either your term or at the end of your amortization. But you will have to pay it back eventually.
Yes. So either way, you're accountable for that. They're just giving
100%.
you.
The first few weeks that this all happened, like people still had their jobs, but they were afraid that they were going to lose their jobs. And, at that point, I would not recommend deferring your mortgage payment. If you can pay your mortgage, leave it as it is. It's only someone should only be taking advantage of it is if you have run into some financial difficulty.
Okay. Another question that we've just got from Ryan, and he's heard that with deferring the mortgage, they may end up paying more in the end due to the interest. And is that true?
Well, it is because you're accruing that interest on for 6 months, right? Or however months you're doing it, right? But the interest rates are relatively low. They have been low for the last 10 years. So I don't really know many people that are paying over 3% right now. And most people are not carrying large mortgages anyway. The average mortgage is less than 500,000. So.
Okay. So quite a different question, and that is for people that are looking, and Mary Grace, we do work with a number of investors, and they also so we've got investors that do flips, we have investors that do buy and hold, and we have investors that do pre-construction.
Mm-hmm.
So in the world of pre-construction, are the lenders, because pre-construction, there are a number of developers that are selling because they've been able to adapt virtual, where everything is done virtual.
Mm-hmm.
So how are the lenders viewing that right now? Is it the same process that they've used before with approving?
Yeah, so I understand the actual builders are getting a little bit more strict. They want firm approvals. They don't want pre-approval letters. They want approval letters. Yeah. So it's becoming more and more difficult for the general public to just provide them a regular pre-approval letter and they're on their way. So people are starting to panic because they, a lot of people buy these they buy them as investment properties so that they can sell them before the closing and they'll make some income based on the appreciation of the value of the home.
Yeah.
And I think that's what builders are trying to avoid, right? So most lenders will look at your application. They can't hold your rate for 3 years unless you're dealing with the institution that's usually funding the project. So an RBC or a Scotia or a TD, they're more the chartered banks that will lock rates for 3 years. So then you would have to do a full application with that lender and get a letter from that particular lender.
I'm curious on the thoughts around that. When I because we've encountered that a couple of times representing clients, and I found it because it was the first time we encountered it. I remember a few months ago, and the builder had there was two of the chartered banks that they were working with.
Mm-hmm.
However, that wasn't the interest of the client. They didn't want to work with those banks. So right. I'm curious on how that's being perceived. Is that kind of limiting? Like, I'm curious on how that whole.
Well, at the end of the day, you can seek a mortgage from anyone once you're closer to your closing date. You have the ability to seek the mortgage from anyone. But if you want to lock in a rate for 3 years, in the event that the rates climb, then your best bet is to work with one of those chartered banks for now, just to get your rate locked in, as well as getting the letter. And then closer to your closing date, then you can shop it. 6 months
Makes sense.
before your closing date, then you can shop it, right? But and that's always happens. Like, not like just because you obtained a mortgage approval through that institution doesn't necessarily mean you need to move forward with them.
Yeah, no, that makes sense. That's a really good point.
Yeah. I think from a customer perspective, interest rates are low, and if they're locking in a 3-year at, under 3.5%, I would take advantage of that. And because in 3 years, if the rates are now 4%, well, you have a mortgage for 3.5. So if that's the best rate, then why not do it?
Makes sense. I have a couple of other questions. One's more of a scenario, but here we got a question. It was, in this market, how can I buy with no money down and refinance once the renovation is completed? So I think they want to know if there's an option or a vehicle out there.
You can technically, no. You need to buy with money down. However, if you're purchasing a home, let's say you're living in it, you can do it with a cashback. You can do it with, you're still going to need some form of money, like a 2-3% of your own money to put down. You can do it as a cashback, but again, you'd have to qualify. Those are really hard to qualify for, because you would need mortgage insurance as well, like the mortgage default insurance. So it's going to limit how much you're able to buy. But typically, no, you do need some form of money to purchase.
Okay. I did get another, it's a scenario, and I thought but I'm just going to read this, and I'd like to get your feedback on it. So, Mary Grace, we asked, how can one qualify for, let's say it's a third mortgage with the bank, if a maximum mortgage qualified for was $700,000, and they already own 2 properties. One is a personal home. The other is an investment, which has it maxed out the total 700,000. I've seen a third property, or they've seen a third property that they're interested in for investment, but they don't know if they would be able to get a mortgage approval letter. And how would, is this even something that is viable or doable for them?
I'm not sure I don't know where this $700,000.
Yeah. So when I read this, I see that so how can one qualify for OA? So I think their question is, they're just trying to figure out how they might be able to qualify for this third property. They're saying if the bank maximum mortgage qualified is for $700,000.
Okay. So they must have already gotten a pre-approval, and the max they can get is 700, but they've already maxed out their 700.
It looks like that. They currently own 2 properties right now, so they're looking to do the third.
Yeah.
And if the maximum mortgage qualified for is 700, but they already own 2 properties.
I don't know what the question is, though.
Yeah, and this came in. We pulled it. Actually, came in by one of our. So how can one qualify for a third mortgage with the bank if the maximum mortgage qualified for is 700? And then I'll take this offline, Mary Grace. And
they can just contact me directly. I'm just
not sure.
I'm not sure if they're looking for. It doesn't make. I don't understand the question really. What I'm answering. So they can contact me directly.
I'll shoot it offline. Yeah, definitely offline. So Mary Grace, what are we're going to call them, what are the predictions? And, we all know right now that things will not necessarily go back until there's vaccine. We understand that. We know that come September, we'll have some flowing, but I'm very curious on what are they predicting for the fall?
It really depends on who you listen to and what you're listening to. So
would you be open to share us a little bit of insight with,
yeah, I've listened to a lot of
perspectives that you're hearing.
Yeah, I've listened to a lot of economists, and we're definitely headed into a U-shaped economy, And basically what that means is there's two types. There's the U shape and there's the V shape. A V shape is that it will sharply spike up and everything will return back to normal. But given the fact that they've asked us to, they're prolonging the stay at home, it looks like we're definitely going to go into some form of recession. What that recession is going to look like, no one is able to really know as of right now how that's going to affect us. I know that this is very different than the 2008 and 2009 financial crisis that I had the privilege of living through. Toronto was unscathed in 2008, 2009. Like we didn't, it was slow, but I was busy. I was working at RBC at the time, and we were busy, and our properties rebounded fairly quickly. We do have one of the strongest financial institutions around the world. And when 2008, 2009 happened, the G7 countries came to our country to see how our financial system works. So as much as it is frustrating for people to, it's hard to qualify for a mortgage, these measures are put in place for a reason, for incidences like we're in right now, that if something tragic were to happen, how would our financial system adapt? So, that financial crisis in 2008 and 2009 didn't affect us as much as it is right now in this time. But the two different things, and the reason why I believe we will rebound fairly quickly if we can get this under control and they let us out, because the 2008, 2009 was a financial crisis. Yeah. What we're dealing with right now is a health crisis. It's like our economy was thriving, our GDP was good, our employment rates were down, people were making money, like our country was thriving. And it's because of this health crisis that we're dealing with that we're unable to work, right? But if we're able to, and I think that's the urgency that the government is really trying to get out. It's the sooner we stay home and we stop the social distancing and stop going out, the faster we can get it under control, the faster we'll be able to get back to resume normalcy. And in that will happen with, like, real estate will rebound and everything else will too, right? So
and that makes a lot of sense. I mean, we know the severity, but we also, I always sort of look at glass half full, but we're also not, this is not the Spanish flu where it was, we know this is deadly, but the Spanish flu was like deadly in a sense. We understand it by now. But we're also adapting, and it's we kind of use the word physical distant versus social, because even social kind of sends this connotation of, and we're seeing it. You're seeing different anxiety. So it's like, no, we need to be socially connected more now than ever. We need to physically be apart from each other. It's all about the physical. That's it.
That's right.
And my husband too, he's an essential worker, and a lot of people with where he's at, but they're adapting. And they're, they just take the precautions. And I think once that gets into the norm and we see that curve flatten, it's kind of how they slowly.
Yeah. I think real estate, there's always going to be buyers and there's always going to be sellers. Like I have a client that, last year bought a pre-construction home, and she lost her job, and, she worked for KPMG. So she lost her job, and she's right now at home, and she's supposed to sell her house and purchase this one. So she's in a really tough situation. So I think real estate, there are going to be opportunities, and that's why I can't emphasize it enough that your finances need to be in order. Scrambling when you want to put an offer in isn't the right time to do that, right? You plan ahead, and you know exactly how much money you have, exactly what it's going to look like is the best. The ball is going to be in your court when you have the confidence in knowing what your finances look like, right?
Yeah, makes very sense. We're all kind of in this together, so we kind of take a day at a time, if you will. For those that have bought pre-construction, Mary Grace, and they are closing in the next, and they're closing in the next 3 months. And if at the end of the day, let's say that they were approved, but they might have just lost their position or they're laid off. Are they still able to, because they're approved, they close, Mary Grace, and then that's kind of on their own? Or have you had any kind of those questions asked?
Not yet. I mean, I don't do pre-construction for long closings like that. I don't have a lender that will underwrite the file a year in advance and
Yeah.
confirm employment. The chartered banks will do that, like your TDs and your RBCs will do that. However, given the circumstances that we are in right now, even that the employment is been verified, I know that they are still asking if you're employed.
Yeah.
So they are still doing their due diligence. Like I have a file that's closing on May 1st. And he already satisfied the income before COVID-19, but he did ask me this morning, are they working right now? So
okay. So
yeah.
then we have to, that makes sense.
They are definitely asking the question. So, people need to be cognitive of that and but that's why I can't emphasize getting your finances in order and knowing exactly what you have for a down payment, savings. It's really important. A lot of people don't even know what they have.
Another question in this area, do you experience, Mary Grace, a lot of people are almost afraid to get that part started? Because it's one of the things I know, as we have a few agents and we get people, they might not be ready now, but maybe a year from now, or they're close to it, but they haven't gotten pre-qualified. So one of our first and strongest recommendations is the first step is to find out financially where you sit. You need to get qualified, pre-qualified. So then I asked if they have a good relationship with their bank, because some may not. And if they do, wonderful, they know you. Or are you open to speak with a mortgage agent? But you absolutely want to find out where you stand a lot sooner. Even if at the end of the day you find out that you might not qualify, you're going to at least understand what your gap is.
Right, and you'll have that year to fill that gap with whatever tools that you need, right? So, there's this misconception that a credit bureau, when you pull your credit bureau, it decreases, and nobody ever wants the credit bureau pulled. But actually, you being late on your payment, on your monthly payment or your minimum payment,
yes,
and carrying a balance over 70% of the limit will decrease your score much more than someone pulling your credit bureau. And when a financial institution pulls your credit bureau, like someone like me that pulls your credit bureau for financing reasons, you have 45 days to seek other financial institutions, and it does not affect your score.
Okay, that I didn't know that. So
Yes.
that's good to know. I didn't know
So
that.
and it's only literally 5 points. It's not much of a drop in your score. So that's why even if you plan ahead and you pull your credit bureau and you understand what it is that you need to do, maybe you have perfect credit. Oftentimes there is some blemish on the credit bureau. I've been doing this for a very long time. Perfect scores are very hard to come by.
Yeah. So
because things happen, right? You miss payments, you forgot the payment that month, busy, whatever. Things happen, right? So it's better to just have a professional look at your credit bureau, look at your documents, look at your savings, and exactly where you stand, right? Because at the end of the day, the idea is you want to buy a property and get the best rate. And in order to get the best rate, you need to have great credit. Your credit score has to be over 680 from a financial institution's point of view. So clients that pull their own personal credits, that is a consumer credit bureau, and it's always much higher because when I'm pulling it, it's graded differently.
Makes sense. Yeah, because it's not. Yeah, because it's.
We're looking for two different things.
Correct. Yeah, I'm not buying clothes and I'm not racking. Yeah, makes sense. That makes sense. So, um, just kind of in closing, and we'll kind of let us get on with our evening. What advice, Mary Grace, would you have to share right now with people? Your own advice that during this time, people that might be considering kind of, is there any other advice that you could offer?
Yeah, I mean, again, I can't stress it enough. Um, Understanding your finances, understanding where you stand, what savings you have. That's far more important than anything before looking for anything to buy, is understanding what you qualify for, and understanding the whole mortgage process. Like, most people don't understand how the process works, and they leave it to the last minute when they're about to put an offer in, and that's just the worst timing.
Yes, it
you,
is.
you want to employ yourself with knowledge, education, and information so that you can make informed decisions. And when you are like, as you know, not everybody is transparent. They're in every industry. You have shady people in every industry, right? So when you're in a position where you're not understanding and you're rushing and you put an offer in and you need a mortgage, then you've opened yourself to be vulnerable. And now that informed decision that you're supposed to have is gone because you're forced into whatever that person's telling you got to do is what you have to do, right? So it's really important to empower yourself with knowledge and work with individuals like yourself and myself that will transfer that knowledge that we have to our buyers.
Yeah, thank you. I guess one thing I can share, and I think this is going hand in hand with what you're saying. When people buy, it'll be emotion. It doesn't matter how much homework they've done. That's kind of the way we are. That's actually human. That's human. That's what we do. It's when we got to make that decision to buy, it's the emotion that makes the trigger, if you will. So important that we have homework done in advance.
Well, just you're up when you're buying, especially if you're buying your first home, you're already nervous and scared because it's the unknown. So you don't know what's the next steps. You don't know what's going to happen. And add more stress if you don't even know what your finances look like, and you don't know what your credit score looks like, and you don't know that you had a missed payment or you had some credit blemishes, right? So arming yourself with the knowledge and empowering yourself with education will always be better off in any situation, not just real estate, right?
We know the company TELUS.
Okay.
So one of he was a very dear friend, business colleague of mine. He used to be the VP of TELUS, and he said to me, the smartest people in the world are the ones that ask questions. So it's okay to keep asking. Don't
100%. Yeah. And I always encourage my clients, like, ask away, ask as many questions as you have. Like, I have the knowledge and I will transfer my knowledge as much as I can. And I always try to speak in layman's term, and I don't use bank terminology and financing terminology that people won't understand, right? So
makes perfect
sense. It was a good call today.
Yes. Well,
thank you for the invitation.
You're very welcome. Thank you for being here. I'd love to have you back.
Sure.
Okay, so but just go and enjoy your evening, and I will be successful cooking.
Oh, okay, thank you so much. Very nice to meet you all, and
thank you. Thank you, Mary.
You're very welcome. Okay.
Have a great night.
Thank you, Joyce. Enjoy your evening.
Take care.
You too.
Okay, bye-bye.